Hello everyone, I'm Bryan Ballentine. I want to talk about what just happened. The Federal Reserve met yesterday and reduced their rate by a quarter point. But I want to talk about what that means and maybe a little bit what was behind that. They emphasized and talked about maybe a tightening labor market, meaning where jobs were really easy to get for the last couple of years, they seem to be a little more difficult maybe, and they're concerned about that. So they wanted to stimulate the economy. So they reduced borrowing cost by a quarter point. Now, what is this going to affect? Maybe credit cards, loans for businesses, that's really what they want, or short-term borrowing costs, maybe if you buy a car. So those items are seen to be to stimulate the economy because people can spend money or businesses can borrow money. It doesn't necessarily mean that mortgage rates are coming down. It could. That's more affected by the long-term rates. But the hope or goal is to stimulate the economy. Some people may be wanting more. And so why didn't they do more? And why am I in front of stamps? If you can zoom in and see this. So I want to show you what the Federal Reserve's other mandate or what they're worried about on the other side. That's inflation. We talked about this. I've been talking about it for decades. But you can see through the years, this is 1930, a U.S. postage stamp, for those that use it, was 2 cents. If I jump to 1960, it was 4 cents. It doubled. Let's go to 2000. The year 2000, it was 33. And in 2020, it was 55. What is it today? Go look it up. I'm going to leave with the question. So the reason why I say that, stamps keep going up. Your bread, milk, everything you buy at the grocery store goes up over the decades. You can just see it in the stamps. So the Fed's trying to balance inflation while still having growth, okay? And I'm not trying to debate whether that's wrong or right today. I'm telling you what just happened. Be informed. Know your short-term borrowing costs probably went down. But more importantly, maybe, if you have some in money market CDs, treasury bills that are short-term, when you get new ones or when they renew, those are going to be lower too. In fact, most banks recently, already this morning, have lowered their rates. So be aware, and if you have any questions, give us a call.